Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. To effectively use the SAR trading model, you have to first be able to determine when a stock is trending. And if you can't do that, then the SAR is not going to be much help. Wilder, who invented the SAR, parabolic SAR indicator, he states that it's most effective in a strong trending security, and that only happens by his estimates 30% of the time. So you can see that there's a need to find a security that's actually trending, and B, it won't happen all the time with all the securities out there. If you know how to spot the trending securities versus security that's simply moving sideways, and you know basically how the parabolic SAR works and how to adjust its settings. If you don't, you can watch our previous video on the basics of the parabolic SAR. But if you have that stuff down and you're confident enough that you like the parabolic SAR and you want to use it, then I'll show you one method that I know for actually effectively trading with it. Basic strategy here is that you're looking for a situation where a downtrend has reversed to an uptrend, or vice versa, or an uptrend has reversed to a downtrend, and then look for a situation where it gives you an entry opportunity to use that particular signal. Okay, here you're in a downtrend, price has been moving lower, and you notice you had the parabolic SAR trailing the price activity from above. That tells you you're in a downtrend, and then all of a sudden you get a reversal. You get price actually triggers the SAR and reverse the situation where you have the stop and reverse signal here, the parabolic SAR signal, below price activity, and that's telling you that you're reversing to an uptrend. And you'll notice that even though the price activity is falling, the parabolic SAR is still rising. Okay, that's just what the parabolic SAR does. It follows like it's a trailing stop. Rather than seeing this shift here and buying up here, that leaves you with, let's see, an entry point at about what, 34, and a stop it down at 24. It's a huge amount of risk involved in that particular trade. What I would do instead is look for a pullback. When you get a pullback down towards the closer to the parabolic SAR indicators, then you could take your entry opportunity with a stop right there off the parabolic SAR, and your risk is much smaller, from 28 to 26, a little bit less than. So you're reducing your risk exponentially, also increasing your gain potential. Remember that when we're in an uptrend, as this particular scenario would insinuate, as you reverse from a downtrend to an uptrend, your exit point is going to be the previous high. That's going to be your target. So you had an opportunity once, twice, 3 times almost. So there's plenty of opportunity there to make money on that particular trade. Clean that chart up. When you're looking at it from a bear's perspective, you just reverse the entire scenario. So we have a situation here where you've pulled down and triggered, what here? Yeah, we've triggered the SAR, a stop and reverse signal. We're now looking at the price trending lower, and the SAR will be above price in those scenarios. Rather than just jump in here at what was this, about $33 a share, with a stop way up here at let's see, 45, something like that, 45, 46. It's pretty pricey risk there. So what you would prefer to do is wait for a situation where price activity moves back up towards that SAR indicator. You can get involved at this level with the stop right here. This gives you a much better risk-reward ratio. And then again, you'll be looking for a test of this low. You're in the downtrend, so you'll be looking for the test of the low. And as you got that opportunity, 1, 2, 3, plenty of opportunity to get out of there with a profit. That's how I would use that. So that's the method that I would use for using the parabolic SAR. Again, you will need to adjust the step and the max step for individual assets. That's just the way it works. Some companies are going to be more volatile than others, and that means you're going to have to be able to adjust it to follow the trend. It's just a visual concept. Look at the past trend and run your settings to have the best results with your parabolic SAR. Typically, securities that trade in a particular fashion will continue to trade in that particular fashion. If there's a good degree of volatility in one security, that's typically going to last. It's like looking at a utility company. They're not all that volatile, except for extreme situations where maybe you've got Enron going on or something of that nature. Then they would get more volatile. But in normal scenarios, they're going to have a particular trading pattern and ebb and flow to them, and that will give you a good method for adjusting your step and max step to accommodate whatever security you're looking at trading. And again, basically when you increase the step or the max step, all you're going to do is tighten up the distance between your SAR and your price activity. And if you tighten it too much, you'll just get a lot of whiplash, whipsaw in and out, in and out, in and out. So just adjust it for however you prefer to use it. But this is the only method that I've found that I actually like using the parabolic SAR for. Okay, and now you know. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.